Welcome, this is Javiii from JT Empire. We're going to do some technical analysis. We use similar structure to the last video. We're going to do market structure first, where we look at ordinary support and resistance. We look at supply and demand zones and trend lines. Then we're going to go into price action, showing you how the market rejects or reacts to each level, and give you some insight as to what the rejections or reactions mean. Alright, so I'm going to use this as my area of support. Say I have a support here. One, two, three touches. Now what I do is that after these three touches, I mark off this level of support. I draw it over to the right in anticipation that if the market comes back to touch it, it will then buy. Now let's look at resistance. So let's say we have a resistance level right here. We have market touch right here one time, we have market touch here two times. So that's remember at least two touches to actually give you your level of resistance. So remember the resistance keeps price downwards. So upon the rejection here, we expect that when the market comes back to reject the third time, it will then push the market downwards, which it actually did. When it comes back here, push the market downwards. Not too far, but it still rejects it. So that's the ordinary support and ordinary resistance. So let's identify some supply and demand zones. So right here now, let's look at the demand zone first. This candle right here is a demand. Remember, the demand zone is the last bearish candle before the buy move. I will take into consideration the wick, top wick to the bottom wick. I'll mark up that whole area, extend it to the right. Now you can see that in this zone, the market reject, constantly being rejecting this zone. So expect the market to buy off of that. On the opposite hand now, we have a supply zone where is the last bullish candle before the buy move. So we have right here, this is a supply zone right here. Take into consideration the week to week. And we will see that over here when the market comes back to the supply area, the market was rejected and immediately pushed up. So that's how you draw your support and resistance the ordinary way, and also the supply and demand zone as a support and resistance. Now let's look at trend line before going to the rejections, etc. As I showed you before, for uptrend line, you will need at least two touches. We have one right here, we have another right here. I will consider that our trend line. Or we could even carry it up higher and consider both of these rejections. One, two, three. That's three rejections to our trend line. That's our dynamic support. So we are expecting that the market should push up higher. So upon this and this, we see that the market comes back to it, could not break. Then the rejection of this trend line, let's say, alright, I expect that the market should rise higher, right? And let's say we have trend line going in the opposite direction now. I draw one touch here, two touch here. I expect the market to consider sell upon the third touch. That's the concept of a trend line. So the market comes back here to touch the trend line, it was rejected immediately. No, you need to understand what's happening to the levels when it comes down to the price action, the candlesticks. There's the ordinary support that we drew in the starting of the video. Let's carry the level all the way over here. We use this and this and this 3 points to get our support. When you look at the candles that form on that level of support, we could see strong bear candle, we see a buy candle, and we see a strong bull candle coming off of that support. Equal pressure from the bull candle as was given on the sell candle. We look over on the next time the market came back to that level, and we see where the market pushes a strong candle downwards, but it could not break. And there was a strong candle coming upwards, a bullish candle that engulfed that sell candle. That's an indication that yes, the market does not want to sell low. There are strong buying pressure in this area, even though we don't see long wicks. We need to watch this because this level is not as strong. We have candles that are closing within this area. Market comes back to test it. Market comes with a huge sell candle again, and it was immediately taken out with buys again once more. The market is still closing with this candle. The fact that it's closing within shows that the level itself is not as strong. But it's like it's building up. It's building up strength. Now, when the market comes back to test it the last time, what you could possibly think is that this huge weak rejection is showing you that the market does not want to go any lower. It's saying to me that there's a lot of buying pressure, a lot of buyers pushing the market, and the sellers are stepping back, leaving the market to the buyers. Just off of seeing this huge weak candle. These over here shows me that there's strong bullish pressure, but the fact that it is closing means that the level is not as strong. Until it comes over here, the level strengthens over time. So with the resistance now, you could see that we have a level here and we have a level right here. The market come, touch it, barely even go inside of the level and it was rejected. We could see some strong bull candle coming to the level, but after the rejection, the buy candle starts to get smaller and smaller, heading back to that buying pressure is weakening. So the sellers could pick up the market to push it down. And that's exactly what happened here. So we use it as a second level. Off of that information, we know that the market could push down potentially. When the market coming back to that level, we're expecting some sell again. But we need to watch for the price action that's taking place about that level. So when the market comes back up to this level now, we could see that we have small sell candles before we even reach it. That's showing that the market wants to go down, but there isn't enough selling pressure to push it downward. We have buy candle pushing into the level again, but when the sells take place, it was not as great. Now, you seeing these small sell candles could say, alright, the selling pressure in about this area isn't strong. So the market comes back up here and starts to sell, you could probably get in for a sell, but it wouldn't hold it for long. So consider the candlesticks that you are seeing there about that area or that level. With the demand area now that I marked off down here, you could see where the market is within the level. The support, the regular support is similar to the demand area that I have here. But the market is still respecting it. Notice it's not breaking it any at all. No closure of candles below. Market builds up over time and it creates large weak rejection. When the market comes back to test over here, after testing one, two, three, just won't break at this point. So the third time around about, it's just weak rejections, and then the fourth time weak rejections till eventually just buy. And a similar case with the supply zone over on this side, where the market comes back to test this supply zone, and it was immediately rejected just like the resistance, because it's pretty much similar here. I will mark off. Let's look at the trend line for a second. Like, I'm just reasoning these things out with you guys, because this is how you should reason it out when you're analyzing. Basic information, I don't want it too technical. It's very, very important to get these basics out of the way. This trend line right here. We have 1 point, we have 2 point. I'll mark off our trend line to this point right here. When the market come back to this trend line, you want to see weak rejection, you want to take note of engulfing candles and all these things on the level. You're not really seeing anything like that at this point. You're seeing huge sell candles, so people anticipate that it probably will go lower. But upon this buy candle right here, pushing the market upwards, the market did not break. If they have a little closer around about the level, it's still not a break. It's not considered a break. The market comes back up. Right now, upon the testing of this level the next time round about, you're expecting some rejection, but you did not see that. You see the market still right through. No, I don't want to go into with the break of the trend line or all that as yet, but this is what you guys should be thinking of. The market should be holding above this, but instead there's a huge sell candle that goes below. Now we need to change the view of this now. Think that break of trend is good. Go to opposite direction, it's not going into the buy. Likewise, support and resistance that I talk about in the technical class. If it breaks support, then it should be resistance. Just like that, these are dynamic support. So if it breaks the dynamic support, then it should be a new resistance, which is why this comes back to the trend line and it pushes lower. On the sell side, you see the market rejects here and rejects here. When the market comes back to test it, you're expecting a sell. Now we have weak rejections to that trend line. Right here, a weak rejections, and then the market comes back close, it didn't even touch it, and it starts to push down. We have a huge sell engulfing candle, engulf the buy candle right here. So expecting a further sell on the market. When the market comes back to test, it did not give you any sort of candlestick pattern like shows indecision or any engulfing, marbles, candle, or anything like that. It went above it. The fact that the market went above it and closed, and we start trading above the trend line, then you expect, of course, break of trend. This was your dynamic resistance. Now that it break above, it's now your dynamic support. Now, these are my few words on the very basic ways to analyze a chart. This is Javiii. Peace.